Well, yesterday we went through a bunch of slides with Cern Basher. Cern, this is, this is a great time to do this. I've just been waiting for the time because I was very interested in learning about the origin of your name. And I'm sure that the folks out there would be regaled as I was by what in the world is Cern? Is it some kind of a exotic animal or bird?
Well, it's a very complex answer, but the short version is this. My parents were traveling in Europe in the 1960s, and they were in Denmark, and they met a guy who wrote a book called The Little Red School Book.
Okay.
And it was about protesting against the system. And
Okay.
it was for teenagers. And the guy that wrote the book, his first name was Soren,
Okay.
Soren. But in Denmark, Soren is pronounced more like Cern. And they liked this guy so much, for whatever reason, they liked the sound of his name. And so they changed the spelling of the name to suit that sound. And the extension of that is in high school, my best friend was a big blonde Danish guy by the name of Soren.
Interesting.
And he was the toughest guy in school. And I had a marvelous time in high school because no one wanted to mess with me because they didn't want to mess with Soren.
I see. There you go. So Cern, you are the first Cern.
As far as I know.
As far as you know, you don't have to worry about like when you join up on email or something that you have to put a 103 after your name. I mean, it's
I've never had that concern, Randy.
okay. All right. Well, I thought it was fascinating, so I wanted to share with everybody. So let's go ahead and dig into the balance of your slides and see where they're going to take us. Because when we stopped, we were worried about the country in the future, or the world potentially and the future. But I think you're going to maybe give us some more optimism in the second half. So let's dig in.
I was worried then, but I'm not worried now.
Okay, good.
Okay, so now I'm going to show some slides that Jim Bianco presented in a recent talk, and there's a series of them here. Okay, so the first one is the U.S. federal deficit, and this is a chart that goes all the way back to before 1970, and it shows the federal deficit over a long period of time, and it's been negative for most of this period of time. There was a brief period in the late 1990s, early 2000s where it was positive.
Right.
Okay. But the federal deficit now, as of February this year, is 1.8 billion on a rolling 12-month basis. So the government is spending
1.8 trillion.
Sorry, yeah, it's 1800 billion. So 1.8 trillion. I'm sorry. Thank you.
Right.
Yeah. What's the difference? A billion,
I
trillion?
I know. It's just powers of 10.
Yeah. $1.8 trillion federal deficit over the last 12 months.
Yes.
Now that's better than where it was in March of 21, where it was over 4 trillion.
Right.
But still, if you normalize for the pandemic, it's still a pretty horrendous number.
Yes.
Okay. And the federal deficit now as a percent of our GDP is about 6.5%. So we continue to run deficits in a pretty major way. And as a percent of the economy, it's a pretty large number.
Yes.
Okay. All right. This chart is a chart of federal spending as a percent of GDP. So if you think about the economy is made up of business spending, consumer spending, government spending, and then the net of imports and exports.
Right.
So federal spending now is about 23% of GDP.
Right.
Now, it was much higher, again, during the pandemic period. It peaked at about 34%. But even at this level, it's still very high relative to where it's been over the last 50-some years.
Right.
In 2009, at the height of the financial crisis, federal spending was 24%. And we're at 23% today. So this is troublesome, right? I mean, it's the government is spending a lot of money.
The government is definitely spending a lot of money, and of course, a big piece of that is interest. I think interest is now the third largest.
We
Uh,
talked about that, yeah, last week. Yes,
yes,
it's
right.
become the third largest. Yep. Okay. If you look at personal consumption now as a percent of GDP, so
Hmm.
now we've moved away from government, we're now looking at individuals, families.
Hmm.
Historically, personal consumption was about 67, 68% of GDP.
Hmm.
Okay. Average
Yeah.
from 2000, this is 2008 through about 2020, 2019. There's some fluctuation around that. The point that Jim was making with this is that we had the pandemic. The government flooded the economy with a bunch of money so people could survive and spend. And then what happened was personal consumption now has levelized or normalized at a higher level than where it was pre-pandemic, at about 69, 70%.
Huh.
It's about a 2% increase. So basically, Jim is saying that what happened was people said, oh, we don't have to worry about anything. The government's just going to give us money, so we can spend more than we normally would.
Yes.
Because if we get into trouble, the government will just bail us out. But that's his conjecture. I don't know whether this will be the case or not, but it's interesting to look at these numbers and see that so far personal consumption has stayed at a higher level than where it was pre-pandemic.
And of course, this only goes back again to 2008. It might be
Yeah.
interesting to see this going back to 2050 or even 2000, I mean, sorry, 1950 or even 1900, just to see what it's been over a very long period of time. And assuming that the stats would be, real good stats. But in general, this would be this would be another one of those ones where it's not sustainable.
It seems like it. Now, if we break this down into goods and services, back to your earlier point,
Yeah.
goods has gone up and stayed high. So it's now at about 12%. So personal consumption of goods as a percent of GDP is about 12% of the economy. And before the pandemic, it was about 10, 11%.
Mhm.
And so, again, people got a lot of extra money or a bunch of extra money and they went out and spent it and they bought goods.
Yep.
They couldn't buy services because everything was shut down. So they bought goods.
Right.
The spending on goods has remained at relatively high levels sometime after now that pandemic spending.
Right.
Okay, now on the services side, there was a downward trend since 2008, 2009. Services were, looks like 48%, 49% in 2009. And just before the pandemic, they were at about 45 and a half. They fell to the floor and during the pandemic.
Yeah.
Well, the floor in this case is 42%. Recovered, but recovered back to that downward trend.
Yeah.
And so now it's under 45%.
Hmm.
Okay, but for whatever reason, spending on goods has remained elevated.
Is
And
is there any color on this in terms of what kinds of services are in the making up this downward trend?
no, Jim did not share any
Okay.
specifics on that.
Okay.
His only conjecture was that people, that families now feel more safe going out further on that skinny branch and spending more money
Yeah.
because the government has shown that they'll backstop them.
Right.
And so this also shows this is U.S. personal savings as a percent of disposable income. So pre-pandemic, the savings rate was, it's hard to read there. I believe it's 6%, 6.1%.
Uh-huh.
Sorry, it's a little fuzzy.
Yep. Yep.
And now the savings rate is about 4%.
Yeah.
So the savings rate shot up initially during the pandemic because of all that extra money that came into the system, but eventually, it was probably spent. And since then, now a couple, 3, 4 years later, the savings rate is normalized at a lower level.
Yeah. So the Bank of America has done some pretty good work in this category, and they're saying, of course, that obviously people were saving at very high rates because they didn't have any place else to go with the money. There was nothing to buy. There was no cars, you couldn't buy anything. So people were putting their money into savings. And then as of, I think it was around last September, they did a report and they said, look, people have a lot of money in their savings accounts. They have almost nothing on their credit cards. They have money in their checking account. So it would stand to reason that people might cut back their savings a little bit if they feel like they've got a good solid amount of savings. So it would be really interesting now to see in this boom bust situation whether this now normalizes and starts trending back up towards 6%.
Yeah. I would suspect that it will over time, but if Jim's conjecture is correct, and the people are now saying, oh, we don't need to save as much because the government's just going to send us money.
Right.
Then maybe not. Okay. Now we're going to play a game, Randy.
Okay.
We're going to play the old Sesame Street game of one of these things is not like the other. Okay. So I don't know if you remember this game in Sesame Street, but
I did. I'm too old. No Sesame. The only Sesame Street I watched was with my kids.
Yep. All right. It's been a while for me too, but yeah. All right. So on this chart, we have the GDP forecast for the United States in black. And we have the GDP forecast for Japan, Canada, Europe, UK, and Germany in the other colors. Which one is not like the others, Randy?
Yeah, right. Yeah, this is a hard one. I know that, I think even my, how old is my youngest grandchild now? 9 months or something. He might be able to figure this one out.
Yes. So. Right. So for whatever reason, the world, these areas, these countries have gone through a very similar thing that we have. And yet our spending is going up and theirs is going down, forecast for this year.
Yes.
So it is possible that we see rate cuts everywhere else in the world except the United States.
Yes.
Right? Because if we do have 2% growth, then why do you need to cut rates?
This is a question that we've started to raise on this show. It's a definite issue. There are headlines now of people saying we don't need to cut the rates.
Yeah.
Yeah.
And here's the numbers for consumption. Again, this is consumer spending, right. Consumer consumption. These are forecasts, and one of these things is not like the others. The United States that's going up, and the rest of the world's going down.
Yeah. Yeah.
Right. So there's something different about the United States, and Jim's conjecture was, in these other countries that are a bit more socialist, they're more used to having the government give them money.
Yeah.
And in the United States, we weren't. And so when the government did, we kind of said, oh, free money, we can spend more. And we haven't changed our thought process. We've been.
I'll be a little more
changed.
I'll be a little more optimistic. When we look at these Magnificent Seven stocks, they are all U.S. companies. This is a little bit unusual, not totally unusual, but a little bit unusual that the U.S. has these 7 megalithic stocks or megalithic companies that are kind of, taking over the world. And they're taking over the world in an area where almost every one of these is contributing to productivity. And we're not even just talking about productivity at the corporate level or the governmental level. We're talking about productivity at the human level, at the day-to-day level, where there's nothing like an iPhone that's ever improved personal productivity as much as the iPhone or smartphones. So there could be an argument made that the United States is way ahead on this because the United States is leading out so far ahead. In fact, you could even make this comparison to Canada. I mean, Canada, how different are the Canadians from the Americans? We're just a border away. They're, kind of the same mix of culture and heritage, et cetera, et cetera. And yes, they're way more socialistic than the United States, but their economy is not doing nearly as well as the U.S. economy.
Yeah. Yeah. It'll be interesting to see if the United States pulls all these other countries up, which I suspect will be the case over time, particularly as AI sort of diffuses, the benefits of AI diffuse around the world.
There's another thing we should add to this, and this will be fun for you to keep in mind in future weeks. Are all of those other populations declining?
Canada, no. Canada's much like the United States.
Is Canada's increasing because of immigration?
Oh, lots of immigration.
Okay,
Yeah.
but I didn't know if it's net increase.
Oh, yeah.
Okay, all right.
Japan is going down the tubes as far as,
Europe is down the tubes.
yeah.
China's down the tubes.
The Eurozone, I don't know about net immigration. My impression is that Europe is getting a decent amount of immigration, but I don't know what it is like net.
No, they're net. I mean, France, Germany, the major companies are losing population. Yeah.
Mm-hmm. Okay. And then these numbers kind of play themselves out in terms of the returns, and we've seen this chart before. This is updated as of March 22nd, so it's a few days old now. If you look at the far right column, U.S. large cap stocks, the S&P 500, has averaged 13.4% since 2011. Okay, and international stocks, EAFA, EFA stocks, have averaged 4.5%. And then further on down the list, third from the bottom, the emerging market stocks have averaged 1% per year since 2011. So this U.S. exceptionalism, I guess, has persisted now for some time.
Yeah. So interesting. Yeah, I'm not the first one to make the case. I'm not going to make any such claim that you have to have a growing population. Not have to, but a growing population, especially when you're bringing in really, really great talent from around the world because they desire to come here. It's gonna benefit your economy over the long term.
Mm-hmm. Yeah, does that apply to humanoid bots if we increase the population of humanoids?
Yes, I would say that it would make an even bigger difference.
Yeah, so we'll see. We'll have a real experiment in the coming years on that.
Yeah, we definitely will.
Once again, the elephant in the room here in terms of returns is Bitcoin. This year up 51% or so, 152% annualized since 2011. And interestingly, Bitcoin as a percentage of global wealth is only 0.2% of global. So we're seeing more and more now that wealth managers, investment advisors are treating Bitcoin as a new asset class. And they're adding it to their asset allocation models, just like they would with real estate, stocks, bonds, cash.
Yeah.
Now Bitcoin is a new category, and they're beginning to allocate to Bitcoin. And I'm hearing that a lot of managers are starting at 1%, but many of them are now already at 3% of a portfolio target.
Yeah.
And so we have a long way to go before Bitcoin is there. It's even at 1.3 trillion value in Bitcoin, it's only 0.2% of the global asset pie.
Yeah.
Gold is 14.5 trillion. So we'll see how quickly it eats up gold, but real estate at 380 trillion is a monster.
Right.
Okay, so that's kind of an interesting perspective, as well as Bitcoin has done up, what is it, 2 million% or something on this page?
Right.
21 million%. It's only 0.2% of global assets.
Right.
Okay. This is one you kind of put in the, this would be unfortunate if this happened. But if you look at the stock market from 2014 through 2024, so the last 10 years, stocks have gone up about 12.8% per year if you bought then and held. But if you for some reason got scared at during the pandemic and sold and just went, let's say, to cash, you would have only averaged 3%.
Wow.
So if you own stocks, make sure you own them for a long period of time. And typically when it's the most uncomfortable, it's the signal that that's the worst time to sell.
Of course.
And when you feel the most giddy about stocks, that's your signal that you probably should be selling some. You need to learn to act opposite to the way you feel.
Right.
Not investment advice, but think about
life advice.
Life advice. Okay, Randy, now we're gonna play a little quiz.
Okay.
And you're my contestant. Okay. What company is this?
What company is this? Keeps stretching its revenue every year.
There's a strong hint in that title.
Every single year.
Stretching.
Somebody keeps stretching its revenue every single year. Something.
Stretching.
Stretching. I don't know. I'm sorry, you got me.
Lululemon.
Oh,
So pretty remarkable growth, 34% growth in revenue for the last 20 years. And they just announced, I think, disappointing, outlook, and the stock has taken a bit of a hit, but it's been an interesting company.
Yeah, and they're Canadian.
They are. There you go. So there's a Canadian success story. Too bad it's not driving the whole economy just yet.
Yes, yes.
Okay, now let's move to India. So as we know, India's population has surpassed that of China, and it's forecasted to continue to grow, and China is starting to turn down.
Right.
Okay, and on this chart, we've also got the blue line of the US and Indonesia and Pakistan, the top 5 most populous nations in the world.
Okay.
Okay. So even though China has a 3-child policy, it's not helped.
Right.
Right. And in India, 86,000 babies are born every day.
Wow.
Average. So pretty staggering numbers.
Yep.
Okay. But one of the other problems that India has is pollution. And 83% of the world's most polluted cities are in India. So this is important that they, get this under control. And China had the same problem.
Sure.
With economic growth. So this is a challenge. In India and Delhi, between November and February, when the air quality reaches dangerously hazardous levels, they shut down schools, they halt construction, and government officials go into crisis mode to protect citizens from the invisible killer. So we'll see if they can make some headway on this in the years to come.
And everybody that lived in California during the 70s and 80s remembers the shutting of the schools and because of smog. So been there, done that. But as countries get wealthier, they tend to solve these problems.
Yes, and moving to electric transportation will help as well.
Right.
And then lastly, on GDP per capita, India still has a long way to go to catch up to China.
Right.
India's GDP per capita is around $2,000, and China is over 12,000.
Wow.
So it's about 1/5 of.
No.
So there's definitely some headroom for growth in the coming years, coming decades.
Mm-hmm.
Okay.
Yep.
All right. Switching gears completely. This is a chart or a table that shows the cities in the United States with the largest number of remote workers. And I guess shouldn't really surprise us that the largest number of remote workers also live in the largest cities, with New York at over 600,000, almost 400 in LA, Chicago almost 300,000.
Yeah.
But I was just a little bit surprised about the numbers.
Yeah.
Because I shouldn't be, but it's just interesting. Okay. Uber. We may have discussed in one of our sessions about the cost of taking an Uber. And in the world, the most expensive place to take an Uber is in Bern, Switzerland. To go 10 kilometers or 6 miles, it would cost you over $42.
Wow.
And Oslo, $32, Tokyo, $31, Paris, $29, Dublin, Ireland, $28. And then Amsterdam, London, Canberra, Australia, Berlin, Germany, and Stockholm in Sweden round out the top 10.
So even in the lowest of the top 10, you're still talking about $4, almost $4 a mile.
Yeah.
Wow.
All right, so pretty expensive. And then on the least expensive side, Islamabad in Pakistan, $1.4.
Wow.
per 10K. So that's pretty cheap. And then we've got a city in Nigeria, India, Sri Lanka, Costa Rica. So there's definitely some pretty inexpensive markets.
Wow. Yep. Yep.
Now, some of these might not be in a car. They might be in a scooter of some
Oh,
sort,
okay. All right. Okay.
right? It's not exactly the same vehicle, probably. I'm
Sure.
sure the Swiss are not riding
Right.
rickshaws.
Right.
Yeah. Anyway, that was interesting.
I
And
thought.
here it is in the United States.
Okay.
So the most expensive place, I believe, on here is Seattle, it looks like, or maybe even Denver.
Yeah.
Sorry, New York. New York's the highest. It says right there at the top.
Yeah.
Yeah.
New York. Yeah. Yeah.
$35 to do a 10-kilometer or a 6-mile trip.
Wow.
So plenty of room for an eventual Robotaxi network to undercut these prices and offer a better deal for people.
And El Paso at the lowest is about $2 a mile. So that gives you your bottom
Mm-hmm.
in the US. Yep.
Yeah. Okay.
Yeah.
All right. This is a fun one. Sales of vinyl records are now outselling CDs. Vinyl is making a comeback. Vinyl was almost destroyed, but it is making a comeback.
Yeah.
So this is good to see. People in the US bought a total of 43 million vinyl records last year, which is 6 million more than the number of CDs.
Amazing.
So if you wait long enough, that record collection that you kept might be worth something.
I'm just worried that we'll go back to wearing ties.
Yeah. Hopefully that's not for a long time. Yeah. All right. And then another fun one, Krispy Kreme
Yeah.
has done well. And did you see the news about them this week?
I did. I'll let you
Yeah.
tell.
Well, the news was McDonald's is going to expand, I guess, the number of locations that they sell the donuts in to over 13,500 by the end of 2026. Now, I don't know why it's going to take them so long. Are
Yeah.
they building donut gigafactories?
Yes, on the gigafactories. It
Right.
might. They have to be extremely fresh, right? I mean, that was part of the charm. So it may be an issue of building bakery facilities nearby. That's
It
keep
may
it-
be.
Yep.
Maybe. I was just a bit shocked. I didn't think they needed to build donut gigafactories, but if you see a big Krispy Kreme factory in your neighborhood, then you know why. They have to feed McDonald's. Okay.
Yeah.
Now, speaking of donuts and feeding, again, back to our debt theme of this week.
Sure.
This poor child now is dragging a ball of 35 trillion in debt.
Yeah.
And the caption here is "Good luck, kid."
Yeah. Yeah.
So, but not to end it on a down note. Let's end it on a positive note. If you are 65 and you have 3 billion to your name,
Okay.
don't worry, you can do very well. Warren Buffett turned 3 billion at age 65 into 138 billion by the time he's 93, which he is now.
Okay.
So don't lose hope to all those people out there that only have 3 billion.
Well, if you just take off some zeros, if you have 3,000 now, you should be able to turn it into 138,000 by
It's
age
possible.
90. Yes.
It is possible. Warren showed us the way.
Right.
It shows the power of uninterrupted compounding.
Yes. And
So
really compounding in his
really
day.
compounding. Yeah. Anyway, I thought that was kind of interesting.
Just buy the right stock at the right time. That's not investment advice, but
That's all you have to do.
there's one beaten down stock right now that kind of reminds me of a beaten down stock that he bought, something called, I don't know, something about an apple or something that he bought a bunch of. That's probably responsible for the vast majority of that increase.
Yeah. No, he might want to go fishing and maybe the auto business for some bargains.
Yes,
Might be an interesting place to start.
indeed.
But yeah.
Well, Cern, it sounds to me like we should all chip in. We should send some money to Washington to pay down the debt. We should possibly elect leaders who are not going to continue to put us into deeper debt. But in the meantime, we should probably encourage good migration. And I don't think your charts proved it, but I'm going to say we should discourage migration that is not thoughtful.
Randy, your ideas are just too common sense for this world.
I don't know. These are just the thoughts that came to me as you were going through your slides.
It's much easier just to print money, Randy. You don't have to solve any problems. You just print the money if you need it.
Maybe folks could comment below whether or not my idea. Well, first of all, comment below about which ones of these things that Cern just went through were interesting and exciting. And then did we reach the right conclusions, or did you reach other conclusions? That would be interesting to know as well.
My goal is that hopefully there's at least something, one slide that's interesting in the presentation each week.
At least one. That's good.
At least one out of, I think it was 54 in today's presentation. So yes, that's not a bad batting average.
Well, Cern, as always, we appreciate you coming on and helping us to see the light side of some of these economic indicators and some of these life indicators and investment indicators. And we'll look forward to another set on in another week. You have big plans for Easter weekend? Are you going to buy a bonnet?
I hope not.
No bonnets for you, huh? Okay.
My wife does dog grooming, and I did notice some bunny ears that have arrived via Amazon. So hopefully it's not for me.
That sounds really not good.
Hopefully they're for the dogs, not for me.
All right, Cern, thank you so much for joining us again. And to all of you out there, it's been great talking to you.
Thanks, Randy.
If you happen to be a big fan of the Cybertruck, you might also be interested in this super fun Cybertruck refrigerator magnet and bottle opener. It is made out of super thick stainless steel, just like the Cybertruck, and it has this giant magnet on the back, so it's going to hold a lot of stuff on your refrigerator. It's an amazing gift, and it comes in that great gift box that you saw before that uses a magnet opener, just almost like an Apple box, like when you get Apple products. You can buy it on Amazon for $29.95, or you can buy it direct from me by sending $25 to paypal.me/Randy Kirk, all in lowercase letters. Please indicate whether you want the stainless steel look, or maybe you'd like to have this very clever camo version. And then if you're not in the US, please add $20 for freight. If you'd like more than one, please check the information below to get pricing, as well as all that information I just told you will be repeated in the information below. So once again, think about joining the channel, getting the up-to-date Tesla news every single day. I think you'll be glad you did.